Alrighty, good morning, everybody. Welcome to the Hurley Investments Trade Findings and Adjustments of June 8th. Couple more people joining in. But otherwise, I think we're good to start. So just to, again, recap, as we usually do, what we talked about on May 25th. Here, market was just popping up from a real crappy 3 or 4 days. Didn't even quite touch that 50-day, which is interesting. A couple times it's gotten close and just kind of bounced off this ghost of a 50-day right above the 50-day. Kind of weird. All right, so what did we talk about on that day? Why we had protection on. We had caught a nice portion of this downward movement, and we had bounced one day off of that 50-day. So we talked about why we had protection on unresolved government debt ceiling issue. We were still dealing with that until like last week, like June, what was it, June 2nd or can't remember. But that issue has been resolved, and it did go to the final hours. It went after the first, I think, if I remember right. Hard to remember up to a week ago, which is obviously silly, but and what happened after that issue got resolved? Well, here we were going up and kind of already started to go up. People feeling that it was already going to get resolved, so kind of ran into it. We've basically gone sideways since. So maybe this was half true. But now we have a rate hike decision coming up. When? This is next week. Here we are. June 14th is our next rate hike decision. Oh my goodness. Let's get some typing in correctly. June 14th at noon o'clock. So what do we expect to happen? Well, I think there's a probability is that they will pause. If you came to my Monday night webinar, you would know we talked a little bit about, we went over the briefing, big pictures, you usually do, but talked about how there was a higher likelihood that there would be a 25 basis point rate hike for the June meeting. And then that was kind of thrown to the side when two Fed governors, Jefferson and Parker, said that they feel like they would be in favor of skipping this rate hike, or I said pausing, but kind of the same thing. But the probability is that that is what is going to happen. Keeping in mind that this doesn't mean rate hikes are done now and we are finished. Really just means that the Fed might want to skip this one and just kind of allow more information to come out and assess inflation. So this is what the market is expecting right now. Expecting a pause for June, and if we get better inflation data, our news-driven market will say, ooh, this might mean that the Fed will pause again in preceding rate decision meetings. So the thought I have is, if it does come to pass that we pause the June, skip the June rate hike in the upcoming meeting next Wednesday, our markets will have an excuse to go higher. Also depends on kind of the forward-looking wording that the Fed uses. So my but is depends on what the Fed says during the meeting. Not meeting, not meat eating, but the meeting. And after that, market will continue to look at employment, energy prices, CPI, PPI, PCE, news, and will react based on whether those indicate that the inflation is going down and that the economy is slowing down but not crashing. Again, that's our soft landing rhetoric that the Fed keeps talking about. We're going to raise interest rates to slow down the economy. Everybody's afraid that they're going to cause a recession. So the Fed keeps saying, no, we feel that this can be a quote unquote soft landing for the economy. And certainly right now, that's sort of what it's looking like. So, possibility of getting a summer that looks like last summer, I can was down at 3,700 and went all the way up to their 200-day, up at 4,300. A lot of the bad news, bottoming out in October at 3,500. A lot of the bad news is already, according to the market, has already kind of was priced in last year. We're now on a trend where we're seeing a crossover on the 50 and 200-day to the positive, which is a bullish indicator technically. Conversely, when the 50 crosses below the 200, it is a bearish indicator. So we've made that movement down. We're hitting higher lows and higher highs. So this isn't to try to predict what is going to happen. Obviously, we get anything negative, there's no reason why our market can't fall out from under itself and cross back below and really piss everybody off. But right now, technically, we've seen a bottom. We're on an uptrend, and we're just kind of, again, not trying to predict the future, just trying to look honestly at where we're at and what are some potential roadblocks coming up, and just taking things as they come. Questions so far? Jim asked, does it seem that we are getting more revisions to metrics, i.e. jobs, etc., reported, especially when the numbers are not positive? Not sure what you're asking, Jim. You're saying revisions to metrics, what I'm seeing is that the job metrics, the employment, all of that seems to be cooling off, not getting so hot. The employment numbers are starting to kind of ease off, job openings, etc. Those are, although they aren't necessarily positive on into themselves, it's positive right now because that's what the Fed wants to see. The economy kind of not getting so hot and things kind of cooling off so that there's less pressure on inflation. But that seems to be happening to some degree. And the fact that those numbers haven't jumped in big amounts also suggests that the Fed is getting their soft landing, at least so far. Not sure if I answered your question though. Any other questions, thoughts you guys have? All right, so there's not too much else to say. As far as a trade, again, we've got another period where if we were really starting to kind of take off or that the the market was more positive about the debt ceiling issue getting resolved, there might be an excuse to do a trade, but we're kind of heading sideways for the last week. And next week, again, we've got the rate hike meeting. So the only trade I would suggest would be to have some degree of protection on your portfolios, which is what we're doing. Guys know we're kind of in the process of transferring accounts to a new brokerage, and we're as we're waiting for accounts in limbo, kind of through that transfer, we're keeping an eye on accounts that have come over and making decisions as things comes up as things come up. We rolled Apple. We had 170 puts prior to the transfer. And after it had come up, we had rolled those puts up to 180. So kind of looking good, but hasn't really come down a ton since we did that. So that was a good one. I feel like we hit this overbought portion of time right here, the turn of the month. Last time we were overbought, kind of went sideways for a while, came down a bit. Another one we were overbought here. At that, kind of had a week of a down week. And kind of every time we've gotten somewhat close to that upper end of the RSI, we've either flatlined or come down, and that's the justification for rolling those up, especially when 170s really aren't going to help us if you know the market starts taking a turn, Apple starts falling. And our rate hike decision, heaven forbid, goes the wrong way. We also had their Apple had their big world reveal of their Vision Pro, which is an outrageously expensive pair of goggles that show you augmented reality, bunch of screens of things right in front of out in front of your eyes. Still trying to grasp what it really is so great about it, especially since it's so expensive. But one part I do understand and see the benefit in is having what would look like a bigger screen or multiple screens, rather than buying a screen that sits there. You put the goggles on, you have an enormous screen or screens that you can have different windows plugged into your computer with different windows and different things that you'd like to see. That sounds cool, but man, again, $3,500 for that, not including tax. That's obviously the first time Apple reveals things, they're usually more expensive, and then later on kind of price comes down. I guess that's somewhat true or mainly true for most electronics. It's usually expensive. Several years ago, OLED TV screens were, you know, several $1,000s, and now, closer to $1,000 for a big 75 or 85-inch screen. So those definitely come down in price, but man, it's kind of crazy. Anyways, usually once their reveal comes in, you guys know Apple stock kind of runs into that World Developer Conference and then falls off afterwards. Ford, another one. It has these crazy sharp upturns where it just bounces ridiculously. Not that we're going to complain that it does that, but it will run up quite volatilely over the course of a couple weeks. Again, same with Apple. Hit this RSI overbought signal, or at least get close to it, and then just start to fall pretty quickly. Let's see, each of these times, a dollar fall in a 12 $13 stock is quite a fall. Let's see, 13.75 down to 12, almost a couple dollars there. Another run up, didn't get to the RSI, but you can kind of see 13 level of resistance. We broke that yesterday. And then yesterday at the close, I started to get protection on at 13.50, rolling him up from 11.50, which was where we had him before the transfer. So took what premium we had left, rolled those up. Great to see it run up above 13, but I feel that 13.50 is also based on this one back here. Let me get my highlighter back. That's kind of almost to even 1375, but we'll call it 13, more like 1350. Struggling to continue to run up today, but it is kind of holding still. If you look back on another longer chart, let's see if we can see 1350. Excuse me. All right, so here was where we pointed to on the other chart back in February. Another point here back in November. So those couple points, and you can see where it got to that overbought, at least almost touched it. This period in August, it even got all the way up to 15. Well, that's not really telling us much right now, but because of the other couple times, because Ford just tends to hit these points and then take a really bad dive, I thought it was prudent to add those, roll those up since they were so far, 1150s were so far out of the money. And definitely makes me much more comfortable having those there. And that's basically what's happened. Guys, is there any other thoughts or questions you have? Alrighty. Well, that does it for me. Thanks for joining me. Let's see what happens in that next rate hike decision. And here's to hoping that we have another June, July like we did last year. Get things to run up, and then at the end of the summer, start protecting some profits before we have our typical September, October fall in our markets. To then get some more shares and get through this kind of crappy interest rate hike period. All right, guys. Thanks again. Take care. Thanks, Jim. Take care, guys. See you next time.